Good evening, loved ones. How's my family doing today? Hopefully, every single one of you guys had a blessed day, whether you were at work, hanging with your loved ones, or doing whatever it was that you were doing today in this beautiful, magnificent world that we live in. This is your boy, Hamid G, dropping you another video to let you know what's going on in the wild, wild west of crypto. Guys, in today's video, we're going to talk about why you continue to be diamond hands and why you should not sell your Doge, your Bitcoin, your cryptocurrency in general. Guys, hedge funds are seeing this decline as an opportunity to buy the dip. Now, they want us retail investors to sell our bags at a loss. Why? So they can scoop it up and make money in the process. Why, guys? You always want to buy in the red and sell in the green. But for some reason, our minds has us do the opposite. We buy in the green and sell in the red, right? Because when you see things pumping right in the red or in the green, right, it's up 10%. I gotta buy it. FOMO. Right, then you FOMO in and you buy instead of buying the dip when things are down, right? Then that's how you make life-changing gains in crypto, right? But anyways, the point I'm making is, guys, this article talks about how hedge funds and institutions with big billions of dollars are buying the dip and why you should too, right? None of this is financial advice. It's just your boy sharing his thoughts and opinions on YouTube, nothing more, nothing less. All right, guys, and then we're going to also look at the charts and talk about levels of resistance and support. Please stay with me to the end, guys. This is a very important and crucial video. Let's get it. All right, guys, as you can see, Bitcoin is up 0.35%. It is at 32,756 with 61 cents. You know, the markets are mixed, guys. We have some green in here, guys, so that's a good thing. Why? Because good old Grandpa Bitcoin is in the green. Even though it's only 0.34, he's in the green. And what does that do? When Grandpa Bitcoin's in the green, the markets are in the green with them as well. Look, you have a lot of other altcoins that are in the green, right, guys? The top 100 on CoinMarketCap. All right, guys, so enough of that. Let's just dive right into the content, see what's crackling with good old Dogecoin, right? Because this channel here is for my Doge army, my Doge soldiers, the Doge community, right? I like to keep you guys updated on current events, on what's going on with Dogecoin and the overall crypto markets. All right, so Dogecoin is currently at 19 cents right now, guys. We are up, or we are down rather, 1.28% for the day. The 24-hour high is at 20 cents. And the low is sitting at 18 cents, guys, for today. Market cap is sitting at 25.67 billion. Oof, right? That's even, actually it was 24 yesterday. I apologize. So we are up just a little tad bit. So things are getting a little bit better, right, guys? And we are down 1.28% as opposed to the 7. We were down almost 8% yesterday, right? And 24-hour volume is at 1.32 billion, right? So that's better. I'll take it. I'll take that over millions, right? All right, guys. Enough of that. Now let's dive right into the chart and see what's going on here. All right, guys. So obviously this is a daily chart, right, guys? Let me turn this thing sideways here. Let me get myself out of here. Shrink me up. Okay, let me shrink up this thing here, guys. I got an iPad, guys, so I will be using my iPad, or I've been using my phone making these videos. I got to learn and educate myself on how to use my iPad, guys, to make videos. If you have any suggestions, any comments, any help, let me know in the comments down below. All right, guys, so as you can see here, right, guys, we have two lines, a blue line and a red line. The blue line is the 20-day moving average, and as you can see it, guys, ever since, like I shared yesterday in yesterday's video, ever since we had that dip from the Saturday Night Live, right, way over here where it says 0.73980, ever since there, right, guys, we have pretty much where we had this major dip where we dipped to 23 cents, right, or technically 0.23390. Ever since then, we have struggled to stay above the 20-day moving average. Granted, when we hit 44 cents, we were above it for about maybe a good 4 to 5 days. But ever since this 44 cents, right, guys, we have trended underneath the 20-day moving average. We cannot break above it for the past, like, I think it's 38 days, guys. We have consistently tested it, but continuously get rejected, right? So with the point being said with that, as you can see right here, 0.2315, right, is where the 20-day moving average is, and that is, in my opinion, 23 cents. Okay, guys, so that is the new level of resistance, is 23 cents. As you can see, as you look at it, guys, just consistently been rejected over 5 times, right, in the last like the last 36 days. I think it's 36 or 38, guys. If you want to correct me, you can let me know the correct days in the comments down below if you like. And the the support, guys, you can see is at 0.1749 at 17 cents, right? That is the 200-day moving average. Okay, guys, so that is our level of support. You can see right here, right? We touched it at 0.16520 about 2.5 weeks ago, maybe 3 weeks ago. We had briefly touched this 200-day moving average, and we caught it as support, and we bounced right back off of it. So guys, this is a very strong level of support at 17 cents. Now the 50-day moving average, guys, is at 28 cents, right? But that's another video that we'll get into. If we get past this 20-day moving average, right, then we'll have to get past the 50-day moving average. But we'll get into that later. I don't want to confuse you guys too much. All right, guys, so the key takeaway from looking at this chart, guys, is 23 cents is a level of resistance. 17 cents as the level of support. I just like to keep it easy breezy when it comes to the technicals. All right, guys, now let's dive into some news here on why you should continue to be diamond hands. Okay, guys, now we're gonna look in this article right here, right? This is where the co-creator of Doge, right, he's talking pretty bad about crypto and Doge, and just, you know, he's got a bad taste in his mouth about everything, right, about crypto and overall, right? It says Dogecoin creator Jackson Palmer says crypto preys on financially desperate and naive in tweetstorm. The man who founded Dogecoin, one of the biggest cryptocurrencies by market cap, has launched an attack on the whole ecosystem. All right, guys. Now it says, I'm not going to read all of it. I'm just going to read a couple of paragraphs, right, where it kind of correlates with the next article I'm going to read. And please stay with me to the end. Don't forget about my giveaway, $300 of crypto when we hit 1,000 subscribers, and we are really close. Okay, now it goes on to say the co-founder of Dogecoin today launched an astonishing attack on cryptocurrency, claiming that it has the worst parts of today's capitalism system. Jackson Palmer, who founded Dogecoin in 2013 for fun with co-founder Billy Marcus, before selling all his holdings, explained in a Wednesday Twitter thread why he wants nothing more to do with the crypto world. After years of studying it, I believe that cryptocurrency is inherently right-wing hyper-capitalism technology, but primarily to amplify the wealth of the proponents through a combination of tax avoidance, diminished regulatory oversight, and artificially enforced scarcity, he said in one tweet. Right? Then he goes on to say, despite claims of decentralization, the cryptocurrency industry is controlled by a powerful cartel of wealthy figures who with time have evolved into incorporate many of the same institutions tied to the existing centralized financial system they supposedly set out to replace, he added. And I kind of agree with that there, right, guys? Now you have all these institutions starting to invest into crypto, you know what I mean, and they're changing things up, they're manipulating it, and they're kind of adding the centralized stuff of the Wall Street to crypto, you know what I mean? So I kind of do agree with him there, and that's why I'm gonna, this next article kind of ties into where hedge funds and institutional investors, right, are trying to capitalize on crypto and put their little spin on it, right? Then it goes on to say cryptocurrency is like taking the worst parts of today's capitalized system and using software to technically limit the use of interventions, audits, regulations, taxations, which serve as a protections or safety nets for the average person, he said in another tweet. It is a remarkable broadside from a man who helped launch the 8th biggest cryptocurrency after a 6,000 rise in the past year alone. Dogecoin now has a market cap of 26 billion. All right, guys, now I'm not gonna, if you want to go on and finish reading the rest of it, you can. I'm not gonna read the whole article, right, because I don't want to bore you to death with that. I want to tie it in with this article here, right, guys? Pay close attention to this, okay, guys? Now this is where the hedge funds want to take your money, right? They want you to sell at a loss. Now it says hedge funds, right, which have billions of dollars, guys. You got to take the key nuggets out of these articles. Now it says hedge funds see the crypto market decline as an investment opportunity, and you guys should too. Don't look at it as, oh my God, my account's going down. You should look at it, if you have the funds, you should buy the dip, right, guys? You know, average down if you have to, or if you can. If not, buy the dip, guys. Why? Because this is where life-changing wealth is made, when you buy when it's low and then you sell when it's high. You know what I mean? Now, this article goes on to say crypto market capitalization is down more than 40% since its 2.5 trillion high back in early May. But institutional investors continue to pile into the market, guys. Not get it, pile into the market, despite Bitcoin losing over half of its United States dollar value and altcoins tanking almost 70% on average. Big money players like hedge funds are still taking up digital currency investment positions. Yet they'll sit there, guys, and badmouth and spread FUD about crypto, about Bitcoin, about Dogecoin, about altcoins, right, guys? But yet they're buying the dip, guys. This is where they want to sell. This is why I'm reading this. This is so important. I'm glad I found this, right? It says, from direct exposure to crypto to backing firms developing products and services in the digital asset space, institutional investors are building a more significant presence in the cryptocurrency and blockchain space. Back in June, a survey of 100 chief financial officers at hedge funds across the world indicated an expectation increase in crypto exposure for the hedge funds in the next 5 years. See, these guys ain't stupid, guys. You know what I mean? That's what they do for a living, right? They invest. You know what I mean? They invest in Wall Street, but you don't think they're going to get into crypto? They want a piece of this pie as well. You know what I'm saying? But the thing is, these guys have the money. They have a lot more money than us, guys, where they can manipulate and push the price up and down, right, to get it at the price they want. That's why you got to continue to be diamond hands, man. Now, it says crypto investments appeal is still strong, guys. Regardless of what you read on the news articles or on YouTube, you know, oh, everything's bearish and people don't invest in crypto. This is the worst time and blah, blah, blah. That is just all FUD to scare you, man. Now, it says early in July, Cointelegraph reported that London-based hedge fund giant Marshall Wace was set to create an investment portfolio focused on digital assets. According to the report, the $55 billion hedge fund was looking toward late-stage funding for a digital finance company and blockchain outfits working on use cases such as payment systems for digital currency and stablecoins. Now, it says amid Rajapal, CEO of Marshall Wace Asia Limited, outlined the company's digital asset investment thesis, stating that the focus is on projects working towards redefining financial services, especially in the area of payments. According to Rapal, digital finance is already changing the architecture of the underlying financial system. DeFi, you know what I mean? DeFi is changing the whole financial system, guys. That's why we're early. I continue to tell you, this is like the beginning stages of the internet. Now, it says Marshall Wallace is only the latest in a growing list of hedge funds and other institutions investors in exploring crypto investment options. In April, United Kingdom-based asset management outfit Brevan Howard floated an $84 million crypto investment fund. Right, guys? And then it goes on. It says here, right, guys? It says, I have been getting contacts from retired funds, not hedge funds, but retirement funds. Very different piece, far more slower moving, but with maybe 10 times more dollars under their control, and they're slowly coming into crypto. Guys, you have retirement funds now wanting to get into crypto. You know what I mean? Not just institutional and hedge funds. Right now, you have the good old freaking retirement funds. Everybody knows, man, there's money, and we are early, right, guys? That's why this is important. You should read this article yourself. It's in Cointelegraph. Always do your own research, right, guys? All right, guys. Now it says recent volatility has proved to be an opportunity for certain trading strategies like market neutral arbitrage, while being in a headwind for others. Better exposure to underlying crypto assets, and in fact, it created an immediate demand for lower volatility defense funds. The investment objective, sizing the risk tolerance, are the critical factors in assessing an investment opportunity, especially in crypto. Basically, what they're saying is, guys, high risk, high reward. You know what I mean? Crypto is risky, but life-changing money can be made in crypto. Right, guys? Now, it says big money players welcome more crypto regulations. Right, guys? You know, regulations isn't a bad thing, guys. You know what I mean? To a certain degree, right? Because it can help with rug pulls and so on and so forth. You know what I mean? It says, as more institutional players make crypto forays, stakeholders say asset managers are not worried about regulatory risks. Indeed, bulk of attention from financial regulators appear to be focused on protection for retail investors. That's what I'm saying, guys. You know what I mean? It's a good thing, right? It says bulls will return in fall. Now, it says, if the current crypto downturn offers a premium investment opportunity for hedge funds and other institutional investors, such as strategy most likely relies on the expectation of a market bounce in the future. As previously reported by Cointelegraph, CERY has predicted the sideways accumulation will dominate the crypto price action during the summer months. Indeed, since dipping by over 50%, Bitcoin has been range bound between the 32 and 36,000 price mark. Bitcoin's lack of significant breakout either way has almost meant repeating mini dips and pumps across the crypto market. However, Cyrus said that he expects a return in the upward parabolic price trajectory in Q4, according to the Avalanche founder. The expected resurgence should be in October or November. I am really excited about what is to come because I know that there is so much interest in institutional retail as well as in the new technology that is poised to change the world. We are in the early days of a very big movement to restructure the entirety of the financial infrastructure. Exactly, guys. See, this is the beginning stages of change in financial. Right now, the internet was obviously something new. Period. Now we have financial system already set, infrastructure set up. Right. That's why so many people are against crypto, because it's changing the already infrastructure in place for finance, right, guys? And they don't want change, right? Because let's face it, even good change is scary, right? Because you don't know what the outcome is going to be. But all right, guys, that's what I had for you guys today. Hopefully this video was useful and insightful. If it was, please consider to like and subscribe. Like I said, guys, you have hedge funds, man, and institutional still buying the dip, even though things are low. We've hit 50%. We've been cut basically down to 50%. Bitcoin has just about, you know what I mean? And the point I'm making, guys, is we're early. Buy the dip. None of this is financial advice. Don't let the FUD scare you, man. You got to stay strong and continue to hodl. All right, guys. Much love. Peace out.